the LLMs of the last few years were very good at like giving you an answer, but they were not very good at like correcting themselves.
Are you actually convinced that the underlying mechanism is actually quantum? There's actually quantum computer underlying it. Up to 20, 30 qubits, we can always simulate, right? So there's no way of knowing.
The intersection is lagging by like 3 to 6 months on the actual progression.
Be like the DeepSeek moment on steroids, where it brings down, like it just crashes like the market for compute, because now we can tap into this like supercomputer.
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X. What's going on, guys? Welcome back to The Roll-Up. Today we have the two good guy VCs of the space here. We've got Wei and Tarun, our chief researchers. Tarun, a man whose hair makes other men's hair look normal, and Wei, a man whose brain makes other men's brains look normal. Guys, welcome to the show.
Hey, it's good to be back.
So I was saying before we jumped on that the Roll-Up Ventures, which is soon to be redacted name and kind of disassociated from the Roll-Up, has been quite slow on the VC side. The tax season, amongst just valuations being quite high still. Would love to just start off with a kind of rundown from your perspectives as to what you guys have been seeing in the landscape over the last 2 to 3 months, particularly which sectors have been hot, or even just like the research topics that you guys have been looking at that have been particularly interesting from a first principles view. I think it'd be super helpful for our audience just to get a rundown as to the latest infra and app side of things. So Wei, why don't you kick us off? And again, welcome to the show, guys.
Yeah, it's good to be back. I think, obviously, I think venture continues as usual. Typically, right, in the early stages, we're still seeing builders building. We're still seeing new ideas. We're still seeing experimentation. But there's definitely like a, slowing down of like meme coins and like, especially on the AI agent side. I think that market, we're still seeing a lot of builders, but right, there's definitely there's like a cooling down of all these, hey, click a button, launch a coin. It's still going to be there. I think there's still going to be, maybe more capabilities to be built there. Right, before we just saw, let's launch, just an AI agent posting on Twitter and with a token, right? And I don't know, content coins maybe is another form, but really, like I think there's more and more like real content actually. So
wait. Are you investing in post quantum stuff? Did you alpha leak something that you're telling us?
I'm actually curious to hear what you think, Tarun. I think I still think it's early, but I think there's a lot of potential long term.
Yeah, I also think it's early, but I think in 2010 I almost did a PhD in quantum computing, and I definitely don't regret not doing it. Let's put it that way.
I mean, quantum computing has been 10 years away for 30 years.
Yeah, right? it's like I just think it. I'm not that convinced. Although I think the Microsoft chip, the idea that we actually have an Anion and a topological quantum computer, which has very low error correcting requirements, would be cool. But they haven't really demonstrated that they can factor anything very big with it. So I'm not that worried. I'm not worried in the sense that like I don't think like, hey, Satoshi's coins are moving tomorrow. You know what I mean?
Can you break that down? What like Anion is that?
Sorry. Yeah. So there's two types of quantum computers, broadly speaking. There are, your classical quantum computers, which are you have a bunch of qubits. So maybe you have, some kind of the classical, when you're in a physics lab. The classical example is like you take a either like an argon atom or I'm trying to remember what the other noble gases that you use, but you put in what's called a penning trap, which is like you put in this really cool thing. The molecule is really tightly packed. You shoot lasers at it and you get it to change its state. And like this is like the class experiment of like how do you make a qubit that lasts for microseconds. So it's not like a stable qubit, but it's like and that type of qubit is usually like single atom or single particle, And one problem is that historically has happened is, if I try to get many of those qubits, because I need more than one to actually do real computation, those qubits interact with each other and they interact with the environment, so they're unable to like hold their state for a long time. So like, maybe you have 3 qubits and one is in this state, one is in this state, and one is in this state. Well, the problem is, due to the environment and interaction, like, even just like a random electron coming in from a light that you have on, it may lose its state. So it's like as if you had memory, but it was like randomly changing itself and you couldn't keep it stable, right? So it's like that's sort of, and so the biggest problem for quantum computers historically has been what's called error correction. So error correction is like a little like error correcting codes that you see in data availability and other places, but it's sort of more complicated in the quantum world, where it's how do I, even if it is noise, even if there's like noise like changing my memory randomly, I've encoded enough signals such that I can always re-decode it. Now, historically, the problem has been either the decoding algorithm is more complicated than the algorithm itself, so you spend more energy trying to decode it, so you don't get the quantum speed up anymore, or it's just like very complicated to work. There's this other type of quantum computer called topological quantum computer, which Microsoft Research has been working on for 25 years. Actually, I was going to do my PhD at Microsoft Research, which was in Santa Barbara, actually. And like Microsoft Research opened this kind of department in Santa Barbara called Station Q. And topological quantum computers don't have to have error correction, but they rely on this very weird state of nature called an anyon, which is multiple particles kind of stuck together in sort of a weird configuration. And because of that, they're very resistant to noise. So like you can perturb them, you can like shoot lasers at them and they'll just stay coherent. They won't like, and that becomes good memory, right? Because it's robust to things. The problem with that is like no one knows how to make those particles like last longer than, again, microseconds before they like break up. And so Microsoft actually, ironically, has been the number one research entity for this for for a long time. I think in like the 80s and 90s, it was more popular in academia, but then people gave up in academia. And this year, Microsoft announced that they had made their first topological quantum computing chip, a Majorana, named after Ettore Majorana, who invented the anyon, which is this type of particle, Italian physicist from the 50s or 60s. And they haven't shown that it does anything yet, though.
So there's no gate being applied?
Well, they've shown that they can run very low depth circuits, like factoring 52. It's like,
but that's state of the art, right? Because
that's state of the art, exactly. But that's my point. Is like, it's just I just don't feel like we're on the growth curve where like I'm really that worried like about breaking RSA or elliptic. Anyway, sorry, that was a very long detour into this stuff.
2 points on quantum computing, right? I think one is, right, if you see a number that, right, any of these articles give out, like number of qubits, there's always a caveat, right? It's a logical qubit, meaning error corrected qubit that persists for a longer time, so you can do larger computation on it, or is it really, right, like a more like a lousy qubit that's not really good for like longer computation, and typically the number is, right, okay, this is not really a logical qubit. I don't think we really have systems with logical qubits yet where you can really have more logic gates being applied, right? And the second is like, there's the breaking cryptography, right? Breaking private keys, and like basically sending the world, going haywire. Versus, okay, let's actually use them for some useful things, right? So there's post quantum cryptography, which is, hey, let's actually upgrade Bitcoin, upgrade our chains to be quantum resistant, right? That actually should come now, but then the actual like quantum computer that can do that will come later, right? Where quantum computers can actually be useful before they actually break cryptography. So like they could, for example, we could do quantum key exchange. We could do maybe useful types of like utilizing, right, the non-cloning principle to build useful things before they're actually powerful enough to break crypto as we know it. So I think like it's very interesting, but not in the sense that you break things. You actually make things more interesting.
Yeah. So the expectation is that first we'll upgrade some of these systems to something that's quantum resistant or quantum secure, and then we'll start to have the things that really have quantum applications. And at some precipice there is a time at which it becomes investable. Right now, it still seems too early to invest in anything that is quantum, like a quantum, kind of system. But it's not too early to start to upgrade some of these systems to be quantum secure. Um, I guess one thing that I'm actually curious about is that I've seen a lot more about is, kind of these marketplaces that pop up around compute. This isn't just quantum, but just a little bit more generalized around compute and the financialization of compute. Like you can trade, resources in cloud, you can trade GPU resources. How do you guys think that quantum will change like the compute marketplace?
If we had a quantum computer tomorrow, like assuming that, or just are you asking that from the perspective of like if everything moved to like quantum resistant cryptography, what would change? Because like quantum resistant cryptography can be implemented maybe not tomorrow, but like
Sooner than
in like
we have
6
quantum
months.
computers.
No, like we know how to do proof of concepts. We've just never kind of made production ready.
We'll have standards actually, right?
Yeah, exactly. It's just like no one has built all the rebuilt to the Bitcoin client around that, or rebuilt a ETH client. You know what I mean? But it's engineering; it's not science. Whereas the building a quantum computer is still science; it's not engineering yet. If that makes sense, like it's like so they're two very different worlds. Like that's why I'm kind of clarify. Like which one do you want?
Recent theoretical results on like you can actually verify that there's a computation that's actually quantum, right? This I think 2018 results, right? That like it used to be you had to have a quantum computer locally to verify that hey, this remote thing, like this entity trying to claim that it's doing quantum computation is actually doing a quantum computation. We'll have access to like 2 quantum computers, right? But like we know theoretical results that hey, it's like zero knowledge proof, right? Like zero knowledge proof says does the prover is claiming a true statement. Can I verify that, right, without knowing the underlying thing? It's similar here, right? You can actually verify that a piece of computation is done in a quantum manner without actually having access to a quantum computer itself. But the construction is very theoretical, but so like because that's possible, we could potentially see a world where you can have actually quantum computers that's remote, and this is actually what some of these quantum computers are. If you like, I think Microsoft or IBM had this like service available for the longest time where you could actually like instruct their quantum computer. But the question is, like do you actually like are you actually convinced that the underlying mechanism is actually quantum? This actually quantum computer underlying it? Up to 20, 30 qubits, we can always simulate, right? So there's no way of knowing. But maybe we can get to a stage where, right, there's remote quantum computers, and you can kind of verify that, hey, this is actually a quantum computer, and I can trust the results. And then there's a question is this actually going to be enough number of qubits for this to make sense?
Yeah, I think that's more to the root of the like my question is that, suppose there is a quantum computer made up of, an arbitrary amount of qubits, and it lives in like Microsoft headquarters somewhere. And for instance, like suppose that we could tap into the resources that are made available through that quantum computer. Will that basically like be like the DeepSeek moment on steroids, where it brings down, like it just crashes like the market for compute because now we can tap into this like supercomputer? Or do you guys see that playing out differently?
Well, let Tarun go first.
I would say I don't think I see that happening, to be honest, because like realistically, and maybe this is because I'm being small brained about this, but like there's not really that many kind of edge applications of quantum computers that I can think of where people are like, yes, we really need to use them for some type of speed up. Like there's a lot of theoretical stuff that's like, oh, you can do certain types of learning theory computations faster or whatever. But like realistically, there's only 2 use cases of quantum computers that I think are like 100%. If you had one tomorrow, you would spend time on them. One is simulations of physical systems. So like simulating, like biological systems, simulating physical systems, simulating nuclear fusion, stuff like that, where like you can do it much faster than a classical computer, and you can show that it actually does that significantly faster. And then second, like the cryptography breaking type of stuff. Like there's really nothing else that like has like extreme value that tomorrow people.
I'll add a third one. I think third one is
Yeah.
really the non-cloning, right? This is what we don't get. If you think about why we have consensus in blockchain systems, right? It's like double spending, but we'll have to make sure
I see. You're a Daniel Kane quantum money person.
Well, not exactly that form. I think it's that's one property of quantum systems, right? That is not possible in a classical system unless we have right consensus.
Yeah. A fun fact is one of the Anthropic co-founders wrote a paper on that a long time ago, but
it's from the 80s.
No, from 2012.
Okay.
On quantum money, on like just like a kind of equivalent of a blockchain, but it's much cheaper than having to use consensus. I think like no one has proven that you can even reach the coherence level for that. So I think that physical systems, you don't need to be perfect, which is why I think it's like in fact, a lot of the existing quantum computers, the things that have the most cited research papers on them are like using them to simulate other physical systems. More than the cryptography stuff. Like, there's like Nature papers about like using the like 10 qubit IBM thing to simulate some weird physical system. So all I'm saying is like, I think like there's a lot of theoretical things you could do. No one has proven that any of them are actually faster. So I think it's very different than the DeepSeek type of thing, where, I think in the DeepSeek case, there's like something profound that they found that is not just purely compute. Like it's clearly an algorithmic thing that underlies it that is the reason that you have so much less compute usage. And I think in general, I don't know if you guys have looked at like the kind of like a lot of the new AI evals. Like, I mean, the fact that Gemini 2.5 is still like 10 times cheaper than all the OpenAI models and gets like better performance should already tell you that I think everyone is moving to this like low cost world except for OpenAI and Anthropic. There's like a two-part world. There's Gemini and DeepSeek, and then there's OpenAI and Anthropic. And I guess we'll find out who wins in the long run.
I mean, the lower cost model should really be run client side, right?
Hopefully. I mean, I think like we're still a little a ways from like the average you can definitely run DeepSeek on your home computer, but we're not quite at running on your phone yet.
I guess one thing that I think like is lost in the client side like world of running models locally is the why. Like, and there's all this conversation, especially in like the crypto niche, about verifiable AI, that I just don't think it just kind of gets lost in translation to the end consumer. Like, how important do you think that really is to people that are using LLMs to write emails and generate pictures of Ghibli, that they run their models client side? Like, why would someone do that?
I think, okay, there's really like a couple different questions here, right? I think for this particular use case, no, you don't really, all you care about, right, is, hey, like it's running my emails correctly. It is, recalling the right information. It is doing the capabilities I needed to do, right? And there's kind of a lower bound on like how much that needs to be, the performance wise, for it to be useful for those use cases. And really, I think it's, if you really have sensitive like information, like in business setting, like, okay, this organization does not want its data to live in a cloud that's possibly easier to be compromised, right? And I think for the personal data, maybe not so much, but before like an organization, like let's say we all saw the Signal Gate, right? For the U.S. government, right? For that type of use cases, maybe you want that model to run on a client side or like on-prem setting. And I think back to your original question,
I'm a little disturbed that Wei is suggesting that a war in Yemen is decided by a client-side LLM, but I guess that's what
that's what they do with 1KX, man.
So were the tariffs. Tariffs were just AI generated too.
I mean, certainly the formula.
Yeah, but I do think like there's different use cases of AI. For example, I mean, if you look at I don't know, for example, loan underwriting, right? That's currently done somewhat manually with automatic processes. If you think that's going to move to AI, then the question of fairness really, it and the question of like, hey, is this really done correctly, or is this some human really like filling with the numbers? Then there's really value in making that verifiable, that it's actually coming from a model that's certified with certain properties, right? So it's not, I don't think it's really for like personal like use case of generating image that you need that to be verifiable, but it's for these mission critical systems that over time will get replaced by AI. Maybe not state of the art, so that there's not that much computation required, right? But the output is really really significant and consequential, right? It decides like humans, like for example, like admission process to colleges, for example, right? And that you make it verifiable and with properties you can certify. That's so it's much better, right? Than maybe a committee of human like deciding on these things.
Yeah, have you guys used Notebook LM?
Yeah, although it kind of feels
Google's
like
tool?
it got like dated really quickly because like everything else suddenly got better right after they released it. I feel like a lot of the other voice AI stuff, like 11 Labs, got like 20 times better, and so I feel
What's
like
11 Labs?
they're
Is that
like
a
a
similar tool?
or like they're like a voice generation AI company, so you can use their APIs to make podcasts in the same way out of text. I just basically think the reasoning models are just like in a different category at this point, like than everything else. And I think, yeah, Notebook LM is kind of like on the last cusp of like the 2024 stuff. The 2025 stuff is like totally, totally different. I mean, I would say like most of my time nowadays in terms of like research or thinking about things has just been like in that world. I have very little in cryptography because like I just feel like there's not that much happening right now.
Yeah.
So this next intersection that we, because we kind of had that first wave of like, as Wei was describing, it was like agent with a meme coin attached, and people were excited. Is there something, Tarun, that you're seeing that will be more prolific in terms of its staying power, that actually will be very helpful for users or developers in crypto, or are you just fully focused on the AI side?
No. I think there is basically. I think all of those agents were like kind of too early. I think the LLMs of the last few years were very good at like giving you an answer, but they were not very good at like correcting themselves and like being more stable. And the current set of reasoning models are like, the reason they're getting superhuman performance on all these human tasks like math contests and research stuff. And like, I mean, I use them in research like all the time now. Is they are able to correct themselves in a way that like, you not only are they giving you a rationale, but they're like playing a game against themselves to give you the answer. So the way to think about how these things work is if you think about the models that like beat humans at Go or StarCraft or diplomacy, what they did is like you have in those models you have like a game, you have a game board, and you have the model play against itself many rounds until it gives figures out what its strategy is, right? What's happening in reasoning models, and this is like a simplification but a reasonable one, is you give a query and you can kind of think of the like policy models as generating a game, right? There's a game with a set of rewards that is constructed from your query, and then the model plays against itself. So it's like trying to collect the rewards in the game against itself until it gets to an answer. And if you design the rewards correctly, it like should kind of take you to hopefully somewhere better. And this idea of like combining this gameplay aspect with like a single LLM is like why they're getting this performance. I feel like I spent like February being in like real doomer land. I was like, oh man, like everything is there's no point in writing anything anymore. Like everything's going to get replaced. And then I just spent the last like month like working on a paper on reasoning model stuff, which was sort of inspired by crypto things. And after spending a lot more time, I would say the places they'll be better is these models are much better at planning, in the sense that they can like plan long-term tasks. They're not just like, it's not like AXBT where I'm like, hey, what do I think the price of TIA is in the next month? And it gives me some one-shot answer. I can now say like, hey, can you construct a strategy based on that, your belief on the TIA price that will like automatically update me on like when I should be buying or selling. And can you plan how my portfolios will look? Like you can do a lot more long-term planning things rather than single one action queries. And I think that is a huge step up. And so I think like all the people who work on AI agents were just like too early. They like built everything around these old models that couldn't really do much, right? They could like analyze data and give you like a summary, which is kind of useless. Like that from the perspective of like a financial product, sure, that's good if you're like deciding whether to invest, but it's not really good of like, it's not doing actions for you. It's not like giving you actual like long-term planning and like doing a job task for you. Whereas now I think they actually are at that point that they're just straight up doing large scale tasks for you.
So it seems like it's like behind. It's like crypto's the intersection is lagging by like 3 to 6 months on the
probably
actual
more like a
progression.
year. Probably more like a year. So I think there'll be another agent boom. I think it's just going to be like, we need a model better than DeepSeek that is good enough, basically. And maybe DeepSeek R2 will be that, right? Like maybe the second DeepSeek model will be good enough for the crypto use cases.
Do you guys think that MPT, like the standardized
MCP?
MCP, yeah, like this protocol is going to be like pretty instrumental in kind of like integrating these two worlds and allowing actions to be taken by these agents?
And perhaps you could explain MCP as well.
So
go for it. Yeah.
I can take a stab at it. I mean the most succinct way of putting it, it's like MCP is like HTTP for agents, right? If you think about right, what your LLM is doing locally, like when you want to use tools. Currently, right, before MCP, it's all like walled garden. You can do this in each AI provider, but there's no interoperability. If you make a plugin, you have to make it for OpenAI or Anthropic. But now these days, right, if you make an MCP tool, then it's accessible by any agent capable of using MCP. I think it's similar to HTTP for information, and MCP is really designed around tool use, and it's certainly plausible that like, hey, this is gonna transform basically how like two marketplaces are built, right? If you build a two marketplace in crypto, like for example with prices or with access to like social data, right, for crypto projects, you should probably think of how you can plug this into be MCP compliant so that you can actually have this be used by other agents. I think, but it's certainly not. I think opens up the playing field, but it's certainly not clear whether like how things are going to shake out on top of that. Similar to how we have the internet, HTTPS, and then right how like browsers, kind of entire Web 2 revolution happened on top of that, right? That required another like decade and a half to sort out. I think the same thing's going to play out on top of MCP.
I would say the one thing that is still unclear to me and may actually require, protocol changes to MCP is the security standards are like really horrible. There's no isolation. And like every day I wake up and find 500 exploits that people are talking about that they've performed. It sort of reminds me of like early Ethereum where every contract was getting hacked every 3 seconds in 2015. And like, it kind of feels like it's not ready for crypto. Like it's not ready for on-chain usage yet. Let's put it that way. But like, could it be? I kind of suspect there will be a protocol that's like a fork of it that is like an isolated, secured version that like has key management separate, so that like there's no way of like a context accidentally revealing a private key or revealing a witness or some secret that it shouldn't. And the current protocol, it has no isolation, right? It was like clearly written because it's like, hey, you know, I don't think people really kind of were assuming that these things would be having that as an assumption, right? It's a very thin layer, but it's a little bit like SSL, right? Like you had to add the secure transport thing on top of HTTP.
No, this is like cross-site scripting. Not sure if you know.
Yeah,
This is
yeah.
a huge thing in Web 2, right? It's like the current MCP is like you have a Python script that evals like external code basically, and you can do whatever.
And it can read
right?
whatever. Yeah, exactly. So I guess my point is like I don't think it's there, but I do think it's a challenge for crypto people. Well, first off, I think it's kind of embarrassing. Crypto people didn't come up with this because, like, isn't the fucking point of blockchains like building communication protocols like this? But the saving grace is that this one's kind of shitty because it literally leaks everything and like it's not secure in any way, shape, or form.
Is ZK the solution to that? Like, hey, I can prove that, like, this model has this output and is going to perform this action, but I don't give up my private key?
I think theoretically, yes. From an engineering standpoint right now, though, I think like if I look at the size of the things people are trying to prove, it's like much bigger than an Ethereum block, and Ethereum blocks are already slow. At least in the current if you look at some of the current MCP servers, they're trying to prove like, I mean, obviously very inefficiently because everyone's just like writing this like raw Python code and I'm proving properties about the text instead of the byte code, right? It's like it's inherently inefficient. But the ZK stuff someone has to build the adapters to make it more efficient. And I'm not sure like there's a cat and mouse game of like people are going to start building the AI stuff to be like way bigger really fast. So like if you're trying to optimize a certain subset for ZK, the AI stuff might have grown so much that like you kind of get beat. So I'm a little nervous about that. I think the more basic things are like encumberment for keys, like having some type of like isolated area that can't be touched by the context and can only be almost like a virtualized TE of like there's an enclave that the models can't touch, but they can like do certain types of requests to. And like inside that unit, it could be ZK, it could be TE, whatever. But like my point is that the protocol doesn't have a way of isolating things so that you can generate those proofs right now.
I think it's it's architected to be that, but there's basically certain things that's leaking, right? Like the attack that actually got circulated on Twitter was actually basically it's not the actual it's really the description of what this tool even is, and that description is getting leaked to the model interpreting it, which is then right you can basically inject in the tool description to then like poison kind of what the interpreting LLM is doing. So I think the broader problem that I see there is it's actually like how do you have like tool selection, right? To be generalized. Like currently, you just access like a HTTP URL, and right, like there's basically the same thing that goes on. But like, which website do you actually visit, right? Like in the early days, we had like search, right? Then you know, okay, this is how I'm going to like sort out which website I'm going to go to. Now the question is, if I have all these tools, right, MCP servers, like how am I going to know which one is relevant for me, right? And this type of search problem is drastically different for MCP, I think, because currently like we need to parse the descriptions, right, to even know like which one is relevant for me. But to parse that effectively, I'm using LLM to parse it, right? And that's where the vulnerability is.
But there's also a routing problem, right? Where like if another MCP client routes to another server, I can't say, hey, I don't want to trust this other server because its security properties are less than X. Like there's it has too much composability, if that makes sense. Like it has no way of me as a user being like, actually, I only want queries that touch these types of language models, which maybe are like the secured or whatever ones that I would want, and these other types I don't want to touch. Right, like the user doesn't even have a way of like expressing something as simple as that right now. It's very primitive in that sense. Like there's no access control fundamentally, right? So you can't even like imagine a public or private key separation if there's not even basic access control. I guess that's more the point I'm trying to get at, which is, and I think that's like the challenge, but also kind of like the opportunity for a crypto team is building like a secure, layer on top, and then being able to like correctly do all this on-chain stuff and have much longer term applications. Like I sort of think the future of Telegram bots, like whatever last cycle's Telegram bot, is going to be this type of stuff. But it needs to be like, remember when the Telegram bots first started and they're constantly getting hacked? And then eventually they moved to MPC wallets, and they eventually, that's the type of transition we have to see here for, I think, their like adoption, if that makes sense.
I think, yeah, I agree, Tarun. I think another thing I like to add on top of that is, if the structure is going to be, right, we'll have personalized agents using MCP or A2A to communicate with like service agents. Like huge unlock here is actually payments, micropayments. Because, right, like currently what happens is like every single payment, effectively there's a human deciding it, right, on the consumer side. And it's a huge overhead, right? That's just why subscription, I think it's like the default for the past decade. But once actions are delegated to agents in a way that like, humans can trust, there could be a lot more micropayment ecosystem, like just infrastructure there, so that, right, my agent can make payments on my behalf. And if this is built directly into MCP, right, I can be ordering like my lunch and just, by asking a message, right, as if I had a EA doing it for me, rather than like doing that myself on DoorDash. And that could have a lot of unlocks, right? And that agent could then try to find a restaurant for, exactly the food that I like. I think that's going to be a huge unlock, and that requires, right, everything that you said, right, controlling information, making sure that things are secure, but as well as like payments and discoverability. And all those things are basically not really there in this Web2 form of MCP. But I think, right, it's something that crypto is uniquely positioned to, hey, like this is exactly the thing that we want to build on top.
Yeah, actually, to your point, I like a company I would want to invest in, but have not seen anyone good at, and it's not really a crypto company, but it like could become one, is basically there's no like search engine / crawling for these MCP servers, right? Right now it's like I go to GitHub and I like look at the link that someone sent, and it's like it feels very like 1997 like piracy. It's like I have to go follow this link to like download the movie to whatever, you know what I mean? But like clearly there will be someone who aggregates and like is the Spotify that recommends to you which server to use. And that there's like clearly a thing for that. I just don't, it's like, it's probably like 1997. So it's like Spotify wouldn't have survived if it started in 1997. However, someone will sell a company like Mark Cuban that is a fake Spotify. if we take the analogy to the 90s too far. But my point is, like, I think there's to this discoverability point, I think in a world of like these agents at being able to like fake reviews and fake, like be like my server is the best to try to route people to them, I actually think like, having to compete on chain for like you have like provable recommendations where people are like, oh, I know that this MCP server like generated this much income. There is a lot of value in that. And I think that's sort of like, you were talking earlier about this like loan agreement credit score stuff. I actually think that's better for how do you rate these servers, these MCP servers. You need to like kind of know, how do I know like how good this server is at doing what it claims it does, right? Like,
I mean,
it's
it's two
actually
sides,
quite
right?
hard to tell.
One is the actual like underlying model, and one is, hey, how does it actually perform? It's like reputation system versus kind of evaluation system, right?
Yeah.
So have you guys theorized a bit more deeply than on the second and third order consequences of this world, and then effectively how that aligns with the way that you're thinking about allocating into, whether it be like L1s, L2s, infra apps, like has this came into, how much has this influenced your decision making on, okay, there's going to be trends that will be in effect as a result of this kind of agent to agent communication? Like, where do you see this trending for the infra side of the space?
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yield on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via FBitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
I guess I'll go first. I think, infra always goes first when it's a new capability, right? But I think a lot of times you will see the infra team also building the app. I would say, right, OpenAI, for example, was the model itself was infra, but ChatGPT was the breakout app. And I think we probably also see this in crypto, right? I think if you look at all the agent coins of last year, right? That those are really infra plus apps together. But then you open up putting more apps on top of your infra once you have a breakout app. I think instead of doing this app versus infra, what I have to do now is really what is fundamental value created here, right? Based as a first order, second order effect of that technology, and what are the downstream changes. And I think infra teams should think about apps should think about what is the actual tech we're building on. But another point I like to add is I also spend a lot of time thinking of what is exactly the crypto unlock, right? There's a lot of ways that a technology could just change the world, but the key question is where does crypto come in? And I think if a team in crypto can answer that correctly and accurately and be early, there's a lot to be done. I think if you look at agents, right, the way that Web2 companies type of agents is very much representing an intention of a human behind it, right? Either personal agents were for a company, and oftentimes there's friction to how actions are generated, right? There's always a prompt. Hey, do you actually mean this? Do you want me to do this thing? Whereas when a crypto project, hey, type of agents, it's all about fully autonomous agents that have its own independent decision making, right? I think that type of experimentation is what crypto is uniquely good at, and that these Web2 counterparts are not thinking about, right?
I guess I think of it a little bit differently in one way, which is in general, there's been a little too much copy trading in crypto where everyone's like, oh, this thing works in centralized land. And so we're going to try to do something very similar, but a little toss in a token somewhere, maybe make a decentralized thing. But if you think about the things that are actually really in the crypto ethos that have worked really well, there's things like Fresa.ai where there was a security contest, right? Where it's hey, if you can figure out how to convince the model to tell you it's private key, then you basically made a bug bounty, right? And stuff like that is actually closer to the crypto ethos and mechanisms than kind of here's an agent that's going to buy every other agent meme coin that looks like it, right? Which is if you go look at all the portfolios of the virtuals and ELISA things, all they did was buy each other's meme coin. But that can only work if the AI16Z and virtuals coins themselves go up. When those crash, everything's dead, right? That's kind of exactly what happened. And I guess in the spirit of things that crypto is good at, first, let's start with crypto is bad at, right? It's never going to be the best frontier model is ever going to be a decentralized one. There's just no way. Compute and communication wise, just not going to happen. The second is coordinating compute actually is quite expensive, especially when there's extremely scarce resources and there's this kind of hoarding of compute resources. So it's actually going to be very hard to have a pure decentralized network. So you should instead think about things where crypto has a competitive advantage. And one competitive advantage is generally speaking, I think things in crypto that work well as applications are things where in the centralized or traditional economy, you're forced to buy a bundle of things and you can't break it up into sub things. And so the simplest example of that is DeFi. So DeFi protocols are almost like individual desks at an investment bank or an asset manager, right? They're individual, and there's no protocol that aggregates all of them, right? We've found in the last 5 years. There's no like one super app, right? There's no super DeFi app that's like does everything. And the reason for that is because the benefit of composability is you can unbundle things. You can separate them into components where they get really specialized and go to the component, and then you can mix and match them together as you need. And that gives you a cost saving, because instead of having to buy the whole thing where you don't use half of it, you're only buying the subset you need, right? So crypto is very good at optimizing cost when you can break something down into components that you can then price separately and then build a bundle you want, as opposed to take the bundle the market force, the company forces you to have. And in AI, I think the DeepSeek moment was the first moment people were like, oh, actually, maybe there is a way of unbundling these AI models, right? There's a way of unbundling the pre-training part from the inference time compute, from the actions that it takes. And I think that DeepSeek moment where costs became much more important than just like pure performance. And I think like until that point, it was just like everyone was in La La Land, right? Like we're just going to have infinite VC subsidy because every VC fund was just like leverage long OpenAI, Anthropic, and like 3 other people, right? That game changed. And this gets to your point about the compute, right? Which is like, once you actually can start competing on compute costs downwards, then you become able to do this unbundling, like crypto type of thing, where I can offer you the same component. I can offer you the reasoning part, maybe not the pre-training part, for way cheaper on chain. And why is that? So actually, and maybe this is like, I got too much in this rabbit hole the last few months. It's like I spent a lot of time trying to understand why DeepSeek was really able to do this so much more cheaply, right? Like, everyone talks about like, oh, they use less compute, whatever, right? Like the inference time costs are cheaper than O1. You look at all the evals that people run, they get like top decile performance, but they're paying like 100th of what the frontier models have, right? Like if you look at Ader. So like, do you guys mind if I share the screen of this?
Yeah,
Go
I
for
see
it.
it. We're looking at the LLM leaderboards here.
Yes.
For those who are listening on Spotify.
Yeah. So basically, you have the first one, which is OpenAI O3 High, which was released yesterday. So, it gets the highest score, but it costs $69 to run the eval, right? So each time you give it the set of queries, it costs $69. O3 alone, without the GPT 4.1, it costs $111. Gemini 2.5, 72%, $6. You already see this like order of magnitude cost. We go down to DeepSeek, 64%, $13. DeepSeek alone, 56%, $5, 55%, $1. So like you see these multiple order of magnitude differences in costs for like 10 or 20% degradation in quality. And that type of thing is exactly this type of like unbundling trade-offs that I'm saying you could make. Like, right? Like, are there people in the world willing to pay for a reasoning model at 1/10 the cost, but maybe they're willing to trade some accuracy? And like, what's the market price for that? And that is exactly where I think crypto stuff is actually useful, is like figuring that out. So I went down this deep rabbit hole of like, how do you what is the secret? Or I mean, obviously there's many secrets that many are not known, obviously, but what is one of the secrets, at least theoretically, that we understand about why DeepSeek was able to do this for so little? And one of the things that's kind of interesting is there is this concept of reward optimization, which is very much similar to like crypto incentive optimization and choosing kind of like how you think about inflation curves in crypto, which is based on what rewards you're giving the model, you will change how long it takes to converge to an answer for you. And like how you choose those incentives will choose how much compute you use.
Is this like good dog, bad dog? Like tangibly, what's the rewards? Like, is it?
So right now the rewards are like synthetic rewards, right? So it's like the person who's training the model is like, hey, okay, I'll give you like a concrete what my best and then I just wrote this paper that I posted like 2 days ago, which kind of has this example. But suppose I give you a task that is the following: ride a bike 100 feet brake, U-turn, and ride the bike back. So there's one way, and like suppose you're just like a kid who's never ridden a bike, right? There's one way to teach you. One is to give you like a sequence of rewards. Like I give you like one candy, one lollipop if you can balance on the bike. Then I give you another lollipop if you can pedal. I give you another lollipop for braking. I give you another one for riding 1 foot, another one for riding 2 feet, another one for riding 3 feet, right? So I can give you these like rewards, and like you try to like optimize to do that. So that's what you can think of these reasoning models as doing, right? You're giving, there's this like kind of, and the rewards right now are just metaphorical. They're just like, it's like points. It's actually, it's synthetic. It's like, it's not tradable or anything. It's like, but it's like points. They're just trying to maximize their points. Now the problem is those rewards are sequential. Like I have to give you every single sequence of operations and tell you like, oh no, if you learn how to brake too late, then you won't be able to do the task, right? Because like you'll have ridden too far and then you couldn't U-turn, right? So maybe I only give you like 5 lollipops if you make it one direction but you don't U-turn because you didn't learn how to brake and you fell. But I give you 20 if you do the whole task. So what DeepSeek did was but the thing is that's very expensive. So you need a lot of human feedback. So that's like Scale.ai, all these companies that are like doing tagging, that's like what they're doing, is this type of stuff. And it's also computationally more expensive because you have to actually like follow the steps throughout each of those rewards. What DeepSeek realized was that actually, if you have very low computational budget, you can't afford to do such rewards. You can't reward each. Instead, what you do is you just say, I'm going to give you 1 million points if you reach the endpoint, and just search. And here's a compute budget and just search, as opposed to like me trying to give you the step-by-step instructions for how to do the task. Does that make sense?
Yes.
Yeah. So one question about the points, like these are synthetic points that represent kind of units of value, but there's some inherent notion of scarcity that
the
makes
scarcity
them
here is just like how you choose the rewards in a very non-linear, non-obvious way affects how much compute time you spend. So they're kind of implicitly guiding how much compute you have to spend. So that's where their real value is. They're sort of like, and that's I got the idea for trying to model this in crypto sense because they like resemble a lot of these crypto systems. And you can imagine a world where people are competing to give you the like cheapest inference on chain by choosing these rewards, by choosing these, and like to your question about like where does the compute cost stuff come in, I think that's where something like crypto actually is like useful for this type of stuff.
Yeah. And so just to close this loop, it turns out that DeepSeek saved all of their rewards until the very end, rewarded just in bulk at the end, and that turned out to be more efficient than sequentially rewarding along the way.
Yeah. Yes. So
that's so counterintuitive.
It's very counterintuitive, and historically, there have been tons of papers that have shown that you can't really like. It's very these outcome rewards, like hey, I just tell you to go to the endpoint, usually doesn't work because it's like too noisy. It's like there's too many possible paths it could take, and like it gets lost, and it fell off the bike, and maybe it went and figured out how to. There's a thing called reward hacking where it found the box of lollipops, so it's just going to eat all the lollipops and not actually do the task.
Blew right through the brake and U-turn. It just kept riding the bike all the way to the ice cream shop.
Or it's like a kid who like found the lollipop box and is like, wait, why am I going to do this? Learn to ride this bike? I'm just going to eat the lollipops, right? Like that's kind of and that's sort of this thing called reward hacking. But they figured out how to do it by like adding certain constraints to their reinforcement learning algorithm such that it like made it fast. And so like my point is there's still a lot of these algorithmic improvements that are on cost savings, right? Like I'd say the last 5 years of AI stuff has been throw more compute, and like not caring about cost savings. But the thing that is closest to crypto is when there's cost savings, because you can now start unbundling and having people compete on giving you a lower price fundamentally. And I think that is where I see stuff that could be very interesting. I just haven't seen anyone who's done it. I think there's one thing I saw recently, which is from Prime Intellect, which I'm not an investor in, but I kind of had sort of vaguely been paying attention to them, where they had been trying to replicate doing the DeepSeek RL algorithm asynchronously. So that means like you can distribute it to multiple people, and they were getting like very similar performance to the raw one, which kind of says like most of machine learning stuff is very sequential, but this DeepSeek thing that where I only give rewards at the endpoint is actually very parallelizable. So you could imagine doing it in a decentralized manner. All of this being said, like this is where I think you're going to find the like new networks is like this type of stuff of like, how do I make it cheaper to give you these things? Sorry, I know it's a very long rant, but you know.
Wait, anything to add there as we kind of come to a wrap here?
Yeah, I think right, like this idea that Tarun talked about, which is really just commoditizing compute that is not frontier, right? Like it doesn't require really a state-of-the-art cluster, and right, and then you really open up like who can serve this model if it's open source. And I mean, I think this type of paradigm, like, you know, happens repetitively, right? And but really, like, there's other ways that crypto could add value besides just commoditizing this compute and then opening up the competition. You know, like I said before, right? Where Web2 AI agents are very much, you know, they're very much not autonomous right now, and really represent human intentions. There's really ways to build something that's completely different in crypto, that's like fully autonomous, right? Like if you think about currently, everything happens because of human intention, right? Where you know there's, you know, companies generating value, right, for shareholders, like, you know, we're you know, individual humans making decisions. There could be, for example, like agents that's actually generating economic value, and that's an idea I think it's very fascinating to think about. Like, what if actually a piece of state and compute, right, when it's cheap enough, when it's smart enough that it can actually generate value autonomously over a long period of time, right? What will be the effect of that if, you know, if we can just ramp up that type of systems? I think that's something that I don't think we'll see in Web 2, but we'll see implementation of that in crypto. I think the first ramification of this is like trading bots, right? Like, can these things actually work out over a longer period of time? Probably not, but, you know, but there's maybe other ways that, you know, other value could be generated on top of just, you know, like zero sum trading. And, you know, there's other properties, for example, like permissionlessness, right? And, you know, can you actually, like, currently we're seeing this commodification of open source models, but but before this, right, the entire question is like, can we actually get these state-of-the-art models in a way that's right, that's accessible by anyone? But maybe at some point it's going to shift the other way, where so because model commoditized now, but the question is really about data, right? Can we actually have these more like cleaned up state-of-the-art data sets to also be commoditized? And that's a part, like these days when I use AI, right, I often use you know, it's maybe a little bit different than Tarun's. I use deep research a lot, where, you know, it's about aggregating a lot of data and just sifting through it and trying to making sense of it. And a lot of times, the data they can access, it's very, very limited. A lot of Wikipedia sources, you know, not enough kind of sifting through and categorizing. I think so. That's another aspect. I'm not sure where crypto come in, but it's, you know, it's a huge issue. If this data has become more and more walled off, you know, maybe crypto can help there to like unlock access. But yeah, it's definitely not an easy to answer question, like where crypto can add unique value.
Well, this I feel like we started off by talking about the most forward-looking thing that is completely uninvestable because it's so far out, which is quantum, and then just slowly worked our way backwards to like bring more so the present into like what's happening here and now, from quantum to AI, and then ultimately to like what is happening in the world of compute and this transition from like traditional cloud to as like the basis of compute to like compute potentially being done in a decentralized way with proper incentives. So Guys, thanks so much for joining. It's been an absolute pleasure as always. And we'll see you next time on the Roll Up TV.
Looking forward.
See ya.
Cheers, guys.